Now, you correctly predicted to us a year ago that Ron Paul was not going to be elected president, partly because you wanted him to be.
Right.
How worried are you now that we do know who the next president is going to be? Are you worried about what you see from President-elect Obama so far? Do you think that could worsen the situation still more?
Well, aren't you worried? Now, I did not vote for McCain, so I don't think this is not some kind of sour grapes or something. But Mr. Obama has said his two main economic planks are he's going to tax capital in a period when we have terrible capital problems and shortages, and he's going to protect American workers. I mean, protectionism and taxing of capital, what kind of disaster do you need to know? I mean, that, throughout history anyway, that has turned into a disaster. Now, let's hope he doesn't mean it. Let's hope he was just trying to get elected, or let's hope at least he prevail. It's cooler heads prevail. He sees the markets collapsing because he was elected, partly because he was elected. Let's hope that that teaches him a lesson. If not, batten down the hatches.
So you can see some parallels with maybe with Smoot-Hawley or whatever, the various bad mistakes that were made in the early years of the Depression. How can you map this onto the stock market? I mean, in the case of 1929, after the initial sharp fall, we still had another 75% to go. I mean, do you see this as arguably a time to buy? Do you see that stocks are cheap, or do you think that we've, at the level of the stock market, still got a long way to go?
I covered a lot of my shorts in the U.S. in mid-October. Just because it looked like a selling climax.
Sounds like quite good timing there.
Well, so far, but so what? You know, just because it's good for 2 weeks or 3 weeks doesn't mean anything. Yes, but it looked like a selling climax. And throughout history, if you buy a selling climax, you've usually come out ahead, at least for a while. My view is that we had a selling climax. The markets are going to rally for a while, but it's not over. I mean, maybe in 6 weeks, 6 months, the problems will start again, and then we haven't seen the bottom in the stock markets yet. That could be next year, it could be 2010, who knows when, depending on what the politicians do. And so far, the politicians are making it worse, not better.
And how do we map this onto the commodities market, which is obviously an area where you've been a famed bull, and we're certainly, when you last talked to us, still confident that we were in a secular bull market for commodities. Do you see the very dramatic sell-offs we've seen in a range of commodities in the last matter of months as a very drastic correction within a secular bull market, or are we actually, is it more than that? Are we actually into a secular bear market?
Well, we're in a period of forced liquidation of all assets. It doesn't matter. This is a period, and as I said, we've seen a few periods in history where people pay no attention to the fundamentals. They don't have the luxury of paying attention to fundamentals. They get margin calls or redemptions or lose their credit line or whatever it happens to be. So they're selling. The way you make money in periods like this historically is you buy the things where the fundamentals have been unimpaired. The fundamentals of General Motors are impaired. The fundamentals of Bank of America are impaired. But what's happening in the markets is good for commodities. It improves the fundamentals of commodities. Farmers cannot even get loans for fertilizer now, and nobody's getting a loan to open a lead mine or a zinc mine going forward. So coming out of all of this, or even not coming out of it, the secular supply of commodities continues to decline. So the bull market case is still there. The optimist case is still there. We're in a secular, we're getting the business cycle effect on demand right now, certainly. But unless the world's in perpetual economic decline, commodities are the only thing that are going to come out of this okay. And even if we were in perpetual economic decline, in the 30s, commodities hit bottom first, long before the economy did, and started going up because there was no supply. In the 1970s, the same thing happened. Economies worldwide were in the tank. Commodities went through the roof because there was no supply, even though the demand was affected. That's what's going to happen again.
Welcome to View from the Markets. We're here today in Seoul, South Korea, with Jim Rogers, author of Investment, biker, and famed investor. It's now a year since we last interviewed you. At that time, it was in Beijing, and I'd like to take you through some of the predictions you made at the time. One of the more interesting ones was that you were very aggressively bearish about the dollar, but you thought that there would probably be a rebound before long, and you would take that as an opportunity to further get out of the dollar. That one seems to have come right. Have you indeed made a further exit from the dollar?
Not yet, no. And the reason I haven't is because we're in a period of forced liquidation of everything. We've only had 8 or 9 periods like this in the past 150 years where everybody has to reverse their positions of everything. There is a gigantic short position in the dollar, and they're all having to cover as they reverse their positions. So this rally is going to go on much further than I would have expected, to my delight, because then I'll get to sell at higher prices. I don't know whether I'll get out this month or this year even, maybe next year. But I do plan to get out of the rest of my U.S. dollars because this is an artificial rally caused purely by short covering.
How will you tell, or what factors will you use to try to guess when that deleveraging is finally over?
Well, I have no idea. I'm sure I won't get it right. But I do hope that when there's a lot of euphoria about the dollar and everybody's saying, well, see, there's no problem with the dollar, and all the things that happen at tops, I hope I'm smart enough to recognize it and finally get out of the dollar, because it is a flawed and maybe even doomed currency.
And why is it in such a bad way at the moment? I mean, do you blame Ben Bernanke and the other financial authorities in the U.S.?
Well, it was in trouble before. Bernanke's been around for 5 or 6 years, but it's been in trouble for a while. Bernanke's made it much, much, much worse, of course, because they're printing gigantic amounts of money. The Federal Reserve's balance sheet has been destroyed by Bernanke. The U.S. government's balance sheet has been destroyed by Paulson. So the two of them together ensure that the U.S. dollar is finished.
So how do you see this whole process ending? I mean, will we end up returning to the gold standard or something similar? And people are talking about Bretton Woods too. Or do we just end up with a very weak dollar?
Well, Bretton Woods too, I don't know what they're going to come up with. I don't think they'll try fixed exchange rates again. I mean, I hope they're smart enough to know that that will not work in 2009, 2010. I suspect that whatever comes out of there will be a failure. Maybe we're lucky and it'll just be a talking shop and they'll all go down to the bar and drink beer together and we won't have any consequences. But the way it will wind up, I suspect eventually there'll be exchange controls in the United States as things get really bad. Politicians have always resorted to exchange controls in the past. Now, this is not anytime soon. And after the exchange controls fail, I don't know. Will they try the dollar standard again? I suspect not. If it happens in the next couple of years, they might try the euro or something. If it happens in 15 years, they'll probably try the renminbi. Conceivably, we'll try the gold standard. I suspect not. But now, having said that, John, I want to show you. I got my own gold, so you know, just in case, I'm ahead of the game.
Well done. That's mightily impressive. You sound, very bearish. There's plenty of bearish people around at the moment. I mean, how severe do you think the recession that we appear to be heading for is going to be?
Well, first of all, I'm wildly bullish on some things. We can come back to that. The recession is probably going to be the worst we've had since the Second World War. I mean, the excesses we had going into this recession was certainly the worst excesses we've had in a long, long time, perhaps in world history. I don't know any time when people could buy a house with no money down. I've never seen that. And many people in America could buy 4 or 5 houses with no money down and no job. I mean, that's unprecedented in world history. Then the bankers took it to car loans and credit card loans and student loans and LBO. I mean, everything. They were having so much fun with all these loans that they just spread it everywhere. Well, you don't clean out a problem like that, excess like that, in a year or two. It takes a long time. The politicians are exacerbating it. You remember in 1929 and 30, what should have been just a normal recession turned into the Great Depression because politicians all over the world made mistakes. It's happening again.